Time now to take a look ahead to the week starting Monday, the 4th of March. Now, it's a particularly quiet day on both the economic agenda and the corporate agenda. So let's kick in with what's happening on Tuesday as we begin out the week. On that day, when overnight we get some details out from Tokyo CPI. You'll remember on Friday we saw some more evidence that inflation is ticking down in many economies. Actually, the Japanese main CPI number out on Friday came in with a slight knockdown. Interesting to see what happens with the main number coming through from the Japanese capital, Tokyo, with its CPI data out first thing on Tuesday morning. Then we get the BRC retail sales monitor, a further look at what's happening within the mechanics of the UK consumer and with regards specifically to the retail sales that we're getting through the shops and footfall. Chinese Caixin Services PMI data out on Friday. We saw some really rather negative numbers coming through from the NBS manufacturing PMI data out on Friday. The Caixin manufacturing data was a little bit more encouraging. The Caixin is a private number that is generated with a private look at what's happening within the Chinese economy. So we get that services data out on Tuesday morning. Eurozone producer prices, and then later on in the day we get the ISM Services PMI data in the States, factory orders, and later on still the American Petroleum Institute, its weekly crude oil inventories. Wednesday, quite an interesting day. We start off with a first look at fourth quarter GDP in the Australian economy. We know that high interest rates, relatively speaking, in Australia have kept a lid on growth. Interesting to see just how the economy ended out the fourth quarter of last year. German trade balance numbers, and later on in the morning we get the S&P Global Construction PMI data out here in the UK. Spring budget as well. Jeremy Hunt, the Chancellor of the Exchequer, will get up and speak at 12:30 UK time on Wednesday. And it's widely regarded as an opportunity for the Conservative Party to underscore what they've done, where they're going, what they can do to try and persuade the investor that it should remain Conservative as we go through the election. Unlikely to be the case, but we'll see just how much of a rabbit he can put out of the bag. Canadian Bank of Canada interest rate decision a little bit later on in the day. The interest rate picture in Canada has changed to some degree recently. Expectations are now we're going to get some sort of an indication potentially about an easing of some of the monetary policy that's been put out in the Canadian economy. US JOLTS openings, we get the private payroll numbers out from ADP at just before the US markets get underway, and the Fed beige book as well. Thursday, Australian trade balance numbers, trade as well in China, UK Halifax House Price Index. We've just seen some rather interesting and upside data coming through from the nationwide House Price Index across the UK. First rise year on year since January 2023, indicating a restriction or a lack of supply, I think, coming through the markets, which is really keeping prices high. Eurozone interest rate decision, will they, won't they? They may give an indication that they might be willing to look at easing policy come June. Nothing's expected this time around, but certainly euro-dollar trade, we'll be looking at this as an opportunity. Some volatility expected around the statement from the Eurozone, the European Central Bank. And don't forget as well, we've seen German DAX, French CAC 40 knocking on the record high door recently. And that's really all about the idea that the European Central Bank is going to deliver an interest rate cut sometime in the summer. US trade numbers and initial jobless claims rounding off Thursday. And then comes Friday, German industrial production, producer prices, French trade balance, fourth quarter GDP growth. It's the final look at Q4 GDP in the Eurozone. But for me, the big swing point of Friday is going to be non-farm payrolls, the number of jobs created. This is data coming through from the US Labour Department, as opposed to private payrolls we saw midweek. Tom Sossnoff joins us now from Tasty Live. With his thoughts. Tom, welcome. Just looking at the front page of the Economist that's been published this week, and it says that the markets, how much higher can they go? What are your thoughts on where we are? Equity markets, as we speak, the 24-hour markets on the IG platform knocking on record highs on the NASDAQ once again. Tech certainly seems to be where much of the money's going.
Well, it is an interesting cover because we always would, in the past, we would always talk about the cover of Barron's, like we'd talk about the cover of Sports Illustrated. And now I think we're talking about the cover of The Economist. I saw that yesterday with the balloons, and it's almost like they ran, it's almost like they're ringing the bell. My take on this is we have reached levels of upside complacency that we haven't seen in a long time. And I have this eerie comparison to the election year in 2000 when the NASDAQ topped out in early March of 2000. And I'm curious to see if we're going to see anything like that again. we also saw something close to that in 2020, although it's kind of more pandemic related, but the NASDAQ topping out in, late February and March. I just wonder, because we've had no two-sided action and because everything in this move has been so concentrated to the upside, like what is the risk reward right now? What are the pot odds? I mean, obviously the market hasn't shown any signs of stress or any signs of breaking, but it normally doesn't when you get to a point of, upside capitulation.
So tech certainly seems to be much of the motor behind what's been happening. And indeed, this was evidenced late yesterday. I just want to reference quickly Dell's results, 16% upside in shares back end of the session yesterday on the extended markets after the Q4 figures. And once again, AI, Dell saying that it's benefiting from its server business, which is now centered around artificial intelligence. Well, you and I were talking about this a couple of weeks ago. It doesn't seem to be the end to upside. One wonders where it's all going to end. But what are your thoughts on what we're hearing in terms of tech?
Well, it's interesting because most of these tech companies that are exploding, most of the public tech companies that are exploding, like Dell and Nvidia and things like that, we are talking about a lot of hardware companies. And to a certain extent, I always get nervous when hardware companies, like if you go back to 2000, you think about Cisco and Intel and Lucent and Sun Microsystems, and you start to think about all the high flying tech companies that essentially either don't even exist today or one or two survived. But you start to think about how easy or how difficult is it to commoditize technology, hardware technology, as opposed to innovation. And it just makes me a little nervous that I'm not doubting anything that's going on. I'm just thinking that we might be priced to perfection, or we might be close to being priced to perfection. And for that reason, I'm leaning a little short in those stocks because I think that you have to be at this point, only because I think there's more opportunity to the downside than there is opportunity to the upside now. But again, to each their own, and we clearly have not run out of steam yet.
Yeah, just wanted to quickly stay on the tech theme and talk a little bit about cryptos. Another one of the headlines this week. And in fact, if I can just bring up this chart of Bitcoin here, it's a well-trodden chart this week, of course, as we see it spike up to highs not seen since November 2021. What sort of traffic are you seeing in terms of commentary and activity around this digital space?
Well, it's been really interesting because especially in the U.S., I can't speak for the rest of the world, but in the U.S., the regulators have been very restrictive as to what we can offer and how customers can trade, digital assets and things like that. But we've seen, in spite of all that, or despite all that, we have seen almost no selling on the retail side. Retail investors have been buyers of digital assets, mostly ETH and mostly, obviously Bitcoin. And the rally in there has been nothing short of spectacular. I think there's a few things going on in the regulatory world, from the ETF launch to the potential launch of, Ether ETFs as well, to the potential removal of some of the SAB 121 restrictions on firms and things like that in the US. All of that has led to kind of just a huge upside momentum and just a lack of sellers. So I think when you look at the Bitcoin market, it is very much a passively long marketplace. I think it's very different than the chip marketplace or than the tech marketplace, because the Bitcoin marketplace, although it is, again, a technology marketplace, it's not a marketplace that turns over that much. It's a marketplace with limited supply, and it's a marketplace that just seems to be people just buy and they hold, and they buy more and they hold more. So it's a very strange, unlike anything we've ever seen before, digital assets. So I'm watching them closely. I am participating in the marketplace, and I think that everybody should participate, even if it's 1%, 0.5%, whatever it is of a portfolio. It is a very nice diversification with zero correlation to the market.
Yeah, interesting. Okay, look, Tom, Oliver, thanks for joining us. So once again, taking a look at some of the effects on these markets and where we're going. As we say, bye to Tom. I just want to quickly bring in the list of companies reporting this week. We've got a long list, relatively speaking, here in the UK. We start off again on Tuesday, nothing of any significance on Monday. The newspaper business Reach, which owns the Daily Express and the Daily Mirror, full year earnings. Greggs, Travis Perkins, Ferguson, Ashtead, and in the States, later on in the morning, we get numbers out from Target on fourth quarter figures. Wednesday, 6th of March, Legal & General, full year earnings. Tullow Oil and Rathbones also out with full year numbers as well, all at 7 o'clock. Some of the stocks that could potentially move in the market on Wednesday morning. Thursday, Aviva, ITV. Remember, ITV on Friday up as much as 15% after it sold its 50% interest in BritBox to BBC Studios, which now owns BritBox outright. ITV taking around about £220 million profit out of that. Page Group, Entain, and then the States, CostCo, Gap, and Broadcom all out with quarterly figures. And on Friday, the retirement advisory group, Just Group, on full year earnings. And that's it for our look around some of the stocks to watch out for next week and some of the events to watch out for on the economic calendar. And as ever, we will be back on Monday morning at 7:30 with the early morning call.